Before we get on with today's podcast, here's a special announcement for our podcast listeners. From time to time, you hear Steve Peasley talking about portfolio checkups in locations in the San Francisco Bay Area, Los Angeles, and Orange County, and that kind of leaves you out if you live in Orange County, Florida. Well, don't feel left out. If you would like to take Steve up on his offer to look over your portfolio and give you a health scan, it can be done on the phone. You can send copies of your documents by fax, email, or regular mail and join Steve for a one-on-one conference call. If you're interested, just go to investtalk.com or call our 24-hour InvestTalk answer line at 888-99-CHART. That's 888-992-4278. And thanks for listening to Invest Talk. Welcome to our one-hour meeting of the minds about money, your money. This is Invest Talk, made possible today and every day by KPP Financial. It's about managing risk while looking for profits, putting the money you worked for to work for you. And now, here's registered investment advisor Steve Peasley.
Good afternoon, everybody, and welcome to Invest Talk. And this is the Thursday edition, December 18th. Of course, I want to welcome all the podcast listeners and internet listeners in our area, and thank you very much for tuning in. Now, I really enjoy that you make Invest Talk part of your day. It really is a pleasure for me to do the show, and interesting when we get the callers coming in and ask questions and thinking about what other people's doing. It's really interesting. Now, of course, our mission every day is to try to help you make better decisions, better stock decisions, buying and selling, mutual funds, buying and selling, any investments, property, bonds, you name it, we'll try to help you with it. And I don't consider myself necessarily an expert. I'm more of a student of what the market is and what it does. And so we're going to learn together. We all learn together. I've been doing it for a while, but again, I learn stuff new all the time. So I'm hoping to share some of that information with you. Now, we've been talking about this being a time to start buying stocks, but carefully. Okay, here we had a big down day. We'll talk about that in a few minutes. And I'm going to share some information about today's movement that you probably did not, because you don't pay that close attention because it's not part of your life, but you probably did not see or understand, because they're not talking about it on the TV or anything. But also, this is a time of the year that you need to think about selling as well. You got to get rid of those things in your portfolio that don't have a bright future going forward. There's different stocks, mutual funds, that are not going to be part of the new Obama stock market rally recovery from our financial disaster. There's going to be, no matter who the president is going to be, there's going to be a recovery. But a Republican president will favor a certain set of stocks, and a Democratic president will favor a different set of stocks. And just so you know, as an interesting statistic, did you know that every time that a president coming into the office moves from being a Republican to a Democrat, every time that's ever happened as a president, the stock market has gone up in the first year of the new Democratic president. Every time. Okay. Now, is that statistically viable? Probably not. But it's just interesting to note that every time that has been true. Kind of interesting. Anyway, so you need to get rid of those things in your portfolio that are not performing, and that's what we want to talk about today. I know it's easier said than done, but it's essential to learn how to get out of things, how to sell things, how to dump them. That also means that many of the stocks, there are many stocks that you might be buying today. I'm not suggesting that you get out of the stock market. I'm not saying that. You should have already been out. I'm suggesting you actually start getting in the stock market. But I am telling you it is time to do some tax loss management, for taxes before the year end, and to get rid of that dead wood in your portfolio that you think is going to come back. Don't think in those terms. Analyze the stock or the mutual fund based on its merits at this time. Don't think back, well, when I get even, I'll get out. It's a wrong way to manage money. Don't think, well, once I get back to where it was, I'll sell it. That's wrong. That's going to guarantee you losses. Guarantee you that your portfolio will never go higher. Think about that. I'm going to sell when I get even. First of all, what if it never gets even? Second of all, once you get even, that means you're going to get out. So you can't get better than even, can you? See how that works? That's not a smart way to do it. Now, I don't want you to be sorry about what you have in your portfolio when the next rally comes. We are going to have a rally. It's just when. And it's going to be a big rally. It's just when. I don't know when. We might be having the beginnings of it now. I can't even tell you. My personal belief is we're going to have a short-term rally in the next few weeks or maybe a couple of months. Then we'll probably retest those lows, and after that, it'll be a much better odds that we'll have a prolonged rally. But it doesn't have to work that way. It doesn't always have to. You just got to be ready to move, whatever move it goes. You just have to be ready. Now, our talking point is going to be 8 reasons to dump a mutual fund. 8 reasons to dump a mutual fund. So, are you in possession of some mutual funds that need to be cut loose? Well, maybe this will help you. Now, today the market started off on an up note, which was kind of pleasant, but then kind of just fell off after the first hour and just continued to sell most of the day. Now, what's really interesting, if you go to the Dow, you look at the volume and you say, boy, there's a lot of volume on the Dow. It was a pretty big volume, over 1 billion shares. Wow. So maybe the sell-off was, meaningful because the sell-off also included a billion shares sold. Well, you would be wrong about that because 435 million of those shares was GE all by itself. 435 million. You take GE out of the equation, the Dow would not have been down nearly as much as it was, but still would have been down. But the volume would be very light if you take GE out of the equation. Now, obviously, you can't take GE out of the equation because GE trades every day. But its average is about 120 million shares. So therefore, it was a little over 3 times its average today. Maybe 3.5 times its average. So that kind of skewed the volume. GE was falling, and because there was rumors about it's losing its high quality rating on its debt. And so people got scared and started trading out of it. So, okay, that's fine. I just think that's what you need to be aware of what's going on. Usually, if you have a high volume day, and the market's down or up, the assumption is that you had either a lot of sellers or a lot of buyers coming in or leaving, and that was significant because there was increased pressure to get out, more sellers leaving than normal. Well, you would get that wrong impression in the Dow today. That's not really what happened. Also, I wanted to point out one more thing. These are just little things about the market that you kind of have to know. I don't know if you know this, but oil is priced on a futures contract in the current month that it's trading. So, for instance, oil went down today nicely, to $30-something, $37, $38 a barrel. And you would say, oh, great, it went down like $3 today. That's great. Man, it's getting really cheap. That's great. Great for all of us. Gasoline prices come down. Okay, but the futures contract.